3 stocks that I'm buying in September 2019. You guys absolutely love this series, and I love making this series. And all I ask is that you just hit that like button down below if you appreciate this, because that helps promote this video and helps promote the channel as well. But without further ado, let's get into our 3 stocks for September 2019. So our first company here, iRobot, goes by ticker symbol IRBT, is a futuristic robotics company. Looking at their charts, you can see that this may be posting a very good opportunity to get into a very strong business at a reasonable valuation. And this is no new company. This company has been around for almost 30 years, and within these 30 years, it has developed some pretty impressive robotics technology. Their main focus today is their Roomba vacuum cleaners, which, as you can see on the timeline, has different models. But many investors miss the boat here with iRobot because all they see is a company developing a cleaning robot. So that's cool and all, sounds like a pretty interesting company, maybe, but why is it worth a possible investment today? My response to that is it's because of its AI technology that's going behind each and every one of these robots that makes it a lot more than just a simple vacuum cleaner company. You can see that year after year, they keep inching closer to becoming a more powerful AI company, transforming from a pure consumer company to a company where their technology is leading the way in terms of communication, because now they have also started leveraging IoT and maybe a player in the 5G revolution as well. And the company has also expanded from just simple vacuum cleaning really to a mopping robot, which, I mean, it's pretty cool, it's something different, and even a lawn mowing robot, which in my opinion is genius because look at this, you can actually go out there, purchase one of these robots, and you can go around offering lawn mowing services to people in the summer, get paid for that, but you just let the robot do all the work. That's possibly an income source right there. I'm gonna write that one down. And also, I think the next progression here would be a snowblower robot. It makes sense, especially for colder countries or countries like Canada here, where we get a lot of snow in the winter, and if you have a snowblower, it makes it so much easier to clean your driveway and sidewalks. So I'm sure we're gonna see a product like that in the next year or so. And this kind of makes me think that this company has a lot more in mind than just a simple robot, because they're actually trying to automate all the chores we have to do around the house. I wouldn't be surprised in the future if they eventually have maybe like a cooking robot, a chef robot, which, you wake up in the morning, it makes you breakfast, has your eggs ready, and you haven't done any ounce of work. All of it is automated, and you can enjoy that breakfast without any work. Hey, maybe that's making us a lazier society, but it's also making us a more efficient society, because now you can use that time to go out and, mow lawns or something with these iRobots. Now, the concern here with iRobot, and a big reason why the stock is taking a hit, is because the tariffs that are surrounding the US and China is actually directly affecting the profitability here of this company. Here you can see a comparison of fiscal year 18 versus what they expect in fiscal year 19. And you can see a healthy growth in revenue, but their gross margin has taken a hit, and this is mainly thanks to 10% tariffs imposed. Now, if the tariffs get up to, say, 25%, this will only make their numbers worse, and based on the stock price, it almost seems like investors are expecting that hike in tariffs. iRobot has pretty much been eating up all of this negativity here from tariffs. They've kind of taken that into the business. They haven't passed it on to consumers yet. But as a result, their profitability has been getting hit. So even though consumers love the product, consumers are happy about no price increase, investors are happy about the revenue increasing, the one thing that they still need to address here is figure out another way to make even more profits, because ultimately that's what investors want to see. The good thing though that I did see in their earnings report was that they are making efforts to diversify the supply chain outside of China. So we may see some of that come into effect in the following quarters or following years, and maybe that'll drive to higher profits as well. Now, on this note, I do think that if the tariffs either get reduced or the battle between the US and China finally comes to a conclusion and an agreement, I think that iRobot can actually be one of those companies that rallies quite significantly on that news. Now, analysts do believe that with iRobot, there is some good upside here with around 30% outlook for this company. And like I said, if the tariffs ease off, this will be one of the stocks that will actually see a massive rally back up, implying that this 30% upside is not as unrealistic as it seems. Now, if you look at the charts here, you can see that the stock has corrected over 50% from its highs, despite showing strong growth in revenue year over year. You can also see back in mid-2018 and early 2019 that the stock had massive rallies and this was on hopes that the tariffs were getting resolved. I'd keep a close eye here on the support level, as I suspect we will come to this sort of support in the near term to test that level. This level has previously been a very significant level for the stock, and this time will be more likely than not the same situation, unless we see the tariffs escalate, which could push us through below this level. So I would keep a very close eye on the stock here. It could be finding a bottom here at these prices. It may be worth opening up a small position in and adding to it if it goes a bit lower. But it's definitely one that I'm keeping an eye on here in September 2019. Stock number 2 is actually a company that I believe has a superior product compared to its competitors. And I think that they are the go-to brand in their space, which is why I think that the recent movement in the stock is incredibly overdrawn and maybe a good opportunity now to go in and profit massively over the long term. Align Technologies, creator of the popular Invisalign invisible braces, is our second stock here for September 2019. And their product is simply genius. If I was here in the market for braces today, I would seriously consider Invisalign versus the traditional metal braces. And this can be for many reasons, but the main reason would be, for me personally, that the Invisalign ones are invisible, as the name implies. So if you're an adult, you can actually wear these without looking like a goofball. Now, the stock has come under a lot of pressure in the last few weeks because they did come out and say in their earnings report that they are seeing competition heat up in this space. And just this past week, one of their biggest competitors, Smile Direct Club, actually announced that they are going public and has filed for an IPO. Smile Direct Club in reality is targeting the lower end of the market here because they like to boast their price point and how much cheaper they are than the competition. Here you can see that they say you skip the doctor visits and still achieve the same results, which is what makes this an appealing choice for many potential customers. In my personal opinion though, if this was me and I was picking between these two companies to get invisible braces for, I would want a professional to go in and kind of look through my teeth and all that kind of stuff and make it custom for me that way, because I believe that'll give me a lot more confidence that things are done right the first time around. In the end, they may end up being the same or very similar in terms of results, but Invisalign has that reputation where they are premium, where they do work, and people are happy with the results. But again, that's personal preference. That's not what you should base an investment decision on. But it is something to consider in your investment thesis. Now, once Smile Direct Club actually files their numbers, we can take a look into that and see if they actually are seeing a lot of success, or if this is a company that actually is kind of, riding the wave right now with these invisible braces, and eventually will hit a point and start declining. But either way, the bottom line that I want to make across here to you guys is that investors in Align Technologies have noticed that Smile Direct Club is going public, and they are sort of afraid, which is why a lot of them are selling out of this stock right now. In my opinion, however, I think things will play out in Align's favor. I think they're still going to be the dominant player in the space. I'm sure the Smile Direct Club will capture a portion of the market, but that's typically going to be the lower end of the market, where not as much margin potentially could be made. But I think that both companies actually have a good opportunity here to succeed. But if I had to put my money somewhere, I would put it into Align, because they do have a good reputation with existing dentists, and that's going to be a huge driving factor for their growth moving forward. When someone goes into a dentist and they're looking for braces, they're going to ask what the dentist recommends. And if the dentist has a good relationship with Align, they're going to say, well, you should look into Align. These invisible braces, it works well. You have thousands of customers that have used it, good company, all this kind of stuff. Versus a online do-it-yourself Smile Direct Club, which completely skips the dentist. And that may work for some people. Some millennials are open to going and do things themselves, but the majority of people out there still rely on professionals for these things. The same can be said for financial advisors. If millennials were out there making their own decisions, there would be no need for financial advisors. But as you know, I'm not going to get into it. There are reasons why financial advisors still exist, and people still go to them. So analysts actually see here a massive upside in this stock with well over 50% from current prices, implying that we may be at very oversold levels here in Align. And I really tend to agree, because I believe that the move that we've seen in the stock is extreme, considering they're still doing well, still growing, and still profitable. Oh, and did I mention that this company actually has $0 in debt? I think that's something that you should consider if you are looking into this stock, because if we do go into recession like everyone's fearing, a company with a strong balance sheet like this is one that you want to have in your portfolio. Now, finally, looking at the charts here, it's kind of crazy to think that this stock has corrected over 56% in just about 1 year, which shows just how volatile this company is and that it's a risk to consider when entering this position. However, on the plus side, it appears like the stock may be forming a bottom here and getting ready for a move up, especially if some good news comes out. This is yet another stock seeing the effects of China, but again, if you are in this space for the long haul, this is temporary weakness in my opinion and just a buying opportunity. I personally don't think that braces are going anywhere, and invisible braces is the natural progression to those ugly looking metal braces that people still use. I think investors are waiting for the next earnings report to see if sales did start picking up again. They did mention in the last earnings report that dentists were trying other brands, but they did start switching back over to Invisalign in the beginning of July. So I think that in the next earnings report, if we see good news around this stock will gap up and probably start moving much higher. So I'll tell you guys right now that I'm actually building out my position in this stock as we speak. And if we continue going lower over the next few weeks, I will continue adding to this position. So I had a very tough time picking the third stock in this series this month because it was a very close battle between Wayfair and Pfizer. But ultimately, I did end up picking Pfizer here because it is a stock that we have not covered on this channel really in depth. And I think that the opportunity that it presents right now is actually one that we haven't seen in a very long time. That being said though, I do think that Wayfair is actually at a pretty good price as well. And if you want to see me do a video specifically on Wayfair, let me know in the comments section down below. If we can get a comment that has Wayfair in it to get at least 50 likes, I'll make that video. But anyways, like I said, Pfizer is our third pick here for September 2019. And this is a stock that I believe is at a very tempting buy right now. Over the last couple of weeks, the stock has actually taken a nice haircut here, and it's providing some good value for a potential long-term dividend growth play. That being said though, I do think at current prices that it also provides good opportunity for capital appreciation as well. And you can enjoy this while earning, I believe right now, a over 4% starting yield as well. So Pfizer is a massive pharma company. I'm sure you guys have heard of their products, and they're close to a $200 billion market cap. Now, this is not a company where I would expect to double or triple my money in like with iRobot or Align, but it is a stock where I can rely on for stability. They've really been around forever. They pay a dividend, I believe starting yield over 4%. They grow that dividend year over year, and they're actually a well-diversified company globally, so it gives you good global exposure as well. So I believe that even if the stock doesn't move up massively in the next few years, that you are holding a very prestigious company here, and it is a company that I personally would like to have in my portfolio. That being said, the stock has taken a hit recently because of a merger that they announced between Mylan and Upjohn. And the fears are mainly because investors are afraid that Pfizer is going to cut their dividend, which is very similar to what they did back in 2008 when they made an acquisition there as well. But the good news is that since 2008, they have started raising their dividend once again consistently. And I don't believe that this time around they will actually call for a cut in their dividend because it isn't as big of a deal here in terms of dollar amounts. They might not need as much money, but it is a risk that you are taking on if you invest in the stock right now. But as an investor here, I did briefly mention Pfizer a little while ago in another video where it was down maybe around 18% or so. And I said at that point it wasn't that appealing to me. But today it's down around 25%, and that's where I begin to find value in this stock. Now you may think a company like Pfizer is so large, they have really nowhere to grow, and that statement could not be further from the truth. If you look at their R&D pipeline here, you can see that they're committed to constantly bringing new products to the table, and they have a slew of products in the pipeline and will continue to expand their R&D efforts as they grow even larger. Analysts here even believe that Pfizer is trading at a 40% discount, and this is very surprising because you rarely see this sort of upside potential in such a large blue chip stock. Even one of its closest peers, Johnson & Johnson, shows around a potential 18% upside, so you may be getting incredible value here for capital appreciation with Pfizer at current prices. Now the charts here show that Pfizer's sell-off was quick, implying that investors may be overreacting here on the Upjohn Mylan news. This sell-off broke out our support level and 200 moving average on the weekly, but I do suspect we come back to test this as soon as investors come back to their senses and start buying the stock back up again. If we do continue moving lower, I think that possesses an even greater opportunity as yield will increase even more and future dividend income from Pfizer will be even more tempting. I have not checked my crystal ball recently, so I don't know if we're going to be going much lower from here, but you can see in the last 10 years the stock hasn't taken much of a hit as it has in the last few weeks. So maybe this is the beginning of a downtrend in the stock, or maybe this is just a golden buying opportunity to get this stock on sale and have this in your portfolio pretty much forever. Either way, I'd love to hear what you guys think about these stocks. Let me know if you're investing in iRobot, Align Technologies, or in Pfizer. I'd love to hear in the comment section down below. Guys, don't forget to subscribe if you're brand new to the channel. I make videos like this all the time. And if there's any specific stock you want me to cover on the channel, leave a comment. And if there is interest out there, I will make a video on that. Thank you so much for watching, guys. I appreciate each and every one of you for supporting me and supporting this channel. Don't forget to share this with a friend as well who's considering getting into the stock market. Show them the potential opportunity that some of these stocks hold. But either way, I hope you learned something from this video. I hope you found value in this video. And I hope that you don't forget to invest positively. Peace.